to book. But how do you approach the markets in 2023? What should the allocation be like? Saurabh Mukherjea, founder of Marcellus Investment Managers, joins us on the show. Hi, Saurabh. First of all, Happy New Year to you, your family, as well as everyone at Marcellus. Wishing you all a cracking 2023, which could be a bit of a rocky year. Saurabh, what's your advice? I mean, how are you all approaching markets in 2023? We did fairly well, resilient. The domestic funds did see, our markets support our markets as the FIs did pull out. But your sense about how 2023 is likely to shape up?
Look, I think, honestly, we're doing the same thing that we have done for the last 20 years, which is realize that beyond high-quality stocks, there really are no other asset classes that will create wealth for my family, my friends, myself. And therefore, my money, my parents' money, Marcellus' 10,000 clients' money, 10,000 clients' corpus remains invested in high-quality Indian stocks. And we really don't lose too much sleep about, what will be GDP growth, where will the Sensex end up at the year end. I think that sort of stuff, that sort of forecasting, crystal ball gazing actually has very little role to play in serious investing.
Saurabh, take your point. And on that itself, I mean, you speak about a few high quality names, etc. Just wanted your thoughts on a couple of things. One, we recently had a conversation with regards to, storification or the biases that one may have while investing. Wanted your thoughts on that one. And secondly, on GMM Pfaudler itself, the promoters have sold about 17.3% stake with a remainder 13-14% still to be sold. And, if the previous trade is something to go by, it was at a steep discount to its current price already. Your thoughts on how one, perceives event risks? So for GMM Pfaudler, event risk, and generally across the board, storification or behavioral biases?
I think storification is a fact of life, right? We live our life in stories. We see whether it's our personal life or our professional life. The way we understand the world is through a narrative. So those who are watching your channel, their understanding of investing in Indian equities, the understanding of their job is a micro story, a chota sa story they tell themselves, and investing is no different, right? We call it an investment hypothesis as the sort of technical name for it, but effectively, investment hypothesis is, in inverted commas, the story around the stock. And that's how investing has been done since the beginning of time. Anybody who believes investing is done by looking at PE multiples or PB multiples, I think needs to go and drink a hot cup of coffee, like the cup of coffee I was sipping a minute back. So I've never quite understood what the issue around storification has been. I think that's the way human beings naturally understand the world, rather than saying that I will invest in stocks with P multiple below 20 or 25, or those sorts of thumb rules which don't get you very far in either in investing or in any other facet of life. Vis-a-vis GMM Pfaudler, I didn't quite see what the issue was. The German private equity fund, which has owned this company, used to be the majority owners till 2.5 years ago. The German private equity fund is nearing the end of its life, and naturally, the German private equity fund, as they said 2.5 years ago, is gradually exiting the company. Having been a broker myself for a big part of my life, when you sell 17-18% of the company, as you rightly said, a company with a market cap of $1 billion, you're selling 17-18%, you're placing $180 million, naturally you have to give a discount. And the day they gave the discount, we happily bought in the market. And we owned it for 3.5 years. We've seen this company's profits grow sixfold, I think, in those more than sixfold, actually, those 3.5 years. And we've seen the company go from being a market cap of $200 million to be $1 billion market cap company. Profits are growing at 50-odd% in the current fiscal. Business is in good shape, and we continue looking for more opportunities to buy more of the company. Hopefully, there's still a bit of a stake that the German PE firm has. Hopefully, when they offload that, there'll be another opportunity for us to buy some more.
Saurabh, afternoon. That's been your strategy, right? Double down on the stocks that you hold whenever the opportunity arises, when there is a steep decline in prices. In the last 2 months, can you tell us where is it that you've increased your weightage, and vice versa? Where is it that you've looked to bring down your weightage because the weightage of that stock in your portfolio became too high for your comfort level? And any churn that we've seen, any stocks in, any stocks out in the last 2 months? except GMM Pfaudler, which you spoke about?
So just to clarify, right, what we look for is if the business is doing really well, but the stock price has come off, then obviously it's time to ramp more. There's a certain quantitative structure that we have, which we use it to guide our traders on where to ramp up and where to ramp down. But just to take a case in point, Divi's Lab, we think the franchise continues to be the best API franchise in the country by some distance. I think there's clear daylight between Divi's and any other API maker. But a lot of people got very excited when Molnupiravir, demand for Molnupiravir fell as COVID rolled off, and therefore the stock is down 35% I think in the last 12 months. So we think the shares are trading at a 50% discount to fair value, and basis that the last 3-4 months have steadily ramped up the position in Divi's Lab. Similarly, Dr. Lal Path Labs in the first 6 months of 2022, I think the stock was off 50%. And again, we could see nothing wrong with the franchise. The company continues to grow non-COVID revenues at 12%, much like it did before COVID. Cash generation is very, very strong. Capital allocation, specifically the Metropolis acquisition, we thought was a good acquisition. And therefore, as the stock came off through June, July, we heavily built a bigger position in Dr. Lal Path Labs. Now, as you're rightly figuring out, to finance these positions, we have to sell something. So stocks which had made us lots of money, which had become an ever larger part of the portfolio, we had to trim those to finance these positions. So for 6 months of the year, I think as we were trying to build the positions in Divi's and in Dr. Lal, we trimmed our Bajaj Finance a little bit to finance these positions. We trimmed up Pidilite a little bit, but that's how you rebalance the portfolio. You take companies where the share prices come off for no logical reason, and you ramp up the positions. And then to finance those, you look at where you've done extremely well, and you take some profits there and reinvest in stocks which have come off. And just to be clear, I've invested in Marcellus's portfolios. My parents are, our 10,000 clients are, so I have a vested interest in all of these companies that I'm discussing here.
All right, Saurabh, what about rural India? That seems to be in a spot of bother. The hope is that things are bottoming out there, at least at some point of time in the coming months. I think in the past you've told us that you have exposure to V-Mart as one of them, one of those stocks I think out there.
That's right. And I think, I honestly, as they say in Hindi, if rural India is bottoming out, but I'm honestly not sure whether rural India is bottoming out or not.
So sort of the feedback I think that you have got is still there is pain out there. And even earlier today we spoke to the management of Bajaj Auto, just to cite an example, and they said that the lower half is still struggling. The upper end, the top half of their two-wheeler market is doing pretty well. So the hope is there, but we don't know when that pain is going to end for the rural market. But are there any opportunities that are coming up from that part? I think you'll have exposure to a couple of stocks, if you could correct me. V-Mart and Amrutajan, I think so, are a couple of names out there.
So we have exposure to those companies, you're right. And I agree with the Bajaj Auto people. We are not seeing any relief in the hammering that low-income people in our country have received over the last 4 years or so. Even discussions with unlisted companies suggest the same point of view. I was really actually pleased to see that the government announced 2 weeks ago another year of basically free food for low-income people. I think that's the sort of relief that low-income people need after the pounding they've taken through COVID. But beyond these sorts of sops from the government, is there any other structural story? Is there a job creation story that will help low-income people? I don't have visibility. I can't see any imminent relief for low-income people in India, and it is quite sad because the rest of the country is rocking. The sorts of people who watch CNBC, their salaries are going up. There's more job creation. Their businesses will be flourishing, and therefore we're living in a country with two distinct stories. One story that we're making money from, the other story we as a country are struggling with. But in a way, the bigger challenge is it's not obvious there's any relief in sight for low-income people in India.
All right. Saurabh, in the financial space, the Kings of Capital portfolio, you've always subscribed to the so-called high-quality private sector financials, the ones which have had a track record of growth, etc. But those have underperformed over the last, say, 12 to 18 months, so to say. And instead, the big performers have been the PSU pack. With the banking sector being where it is right now and the NBFC sector, do you think the next leg of growth will come from private players, or the PSU rally will continue?
Look, we have to keep in mind that you are managing money for 10,000 people. Now, can I take, say, your money and invest in a bank where the MD CEO changes every 3 years, right? I don't think I can. In a sector like banking where equity gets leveraged up 10x, you obviously need assurance that high quality people will run this bank or this NBFC for many years to come. Unfortunately, with PSU banks, it's difficult to get that. But every 3 years, in many cases, every 2 years, the MD CEO will be spun around and a new person will rock up in the job. The second is these PSU banks are geared 18, 19, 20x. That's frightening amount of financial leverage. This is debt equity. We are investing, say, in an HDFC bank or a Kotak bank, which are levered 6, 7, 8, 9x. And they're generating, in HDFC Bank's case, 18% ROE with, say, 8x, 9x leverage. Other people are investing in, just to use an example, State Bank of India, which is generating the same ROE as HDFC Bank, but with more than twice the leverage. And that, again, is something we find very difficult to countenance. Our job is to protect investors' money before we compound it for them. And how exactly I will protect someone's money if I'm investing in a bank which is leveraged 18, 19, 20 times is something which is beyond us. The third challenge we have is the PSU bank exists to serve the nation. They are owned by the government of India by and large, and they exist to serve the government of India, quite rightly so. Why will they compound money for Marcellus? The shareholders of our Marcellus is not quite clear to me, and hence, we've stayed away from these, and that's what we'll do for the foreseeable future, which is invest in banks where you can see a long track record, a prudent financial management, a stable management team which has built the business over 20, 30 years of hard work. That's how investing is done. And if that underperforms, so be it. That underperforms. But the goal is not to sort of wake up every morning and beat the index. The goal is to make sure you protect your clients' money and then compound it as a Kotak bank or an HDFC bank grows their business at around 20%, which is what they've done for the best part of 20 years.
Just a quick word. How long do you think this PSU banking upcycle will last?
I honestly don't know. We don't have any crystal ball gazing to be done here.
All right.
If I look at the last 10 years, they've created zero shareholder value. But I take your point, in the last 3 years, basically from the COVID meltdown, they've done well. So the way we think about it, the higher the NPAs through COVID for a PSU bank, the better their shares have done. How long the party lasts, I wouldn't know.
Thank you very much, Saurabh, for joining in. Right now, at least, there is still a party going on in the PSU banking space, but great conversation as always. Happy New Year. Slip into a very short break. As always, we'll get you a check on what Dealing Rooms is saying in our segment.